FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. It's October 4th, 2017. We're in the fourth quarter. October, the month of crashes and corrections and disasters. Will this October be the same, or have we seen the worst in September? Let's hope. But let's see what's going on with the markets, whether they be precious metals, stock market, dollar. Here's Nick Santiago, InTheMoneyStocks.com. Before we start, questions, comments, email us at kl@kerrylutz.com. Nick, it's good to have you back on.
It's great to be back, Kerry. Thank you for having me.
Hey, so stock market, it's like Old Man River. It just keeps rolling along, right?
Oh, absolutely. Just keeps going higher, grinding higher. We were looking, actually, I was thinking around the fall equinox, we were going to get a little bit of a correction, and that lasted really just all of a couple of days, and the market just continues to grind higher. Something ironic, though, that people will talk about a lot is the volume, and the trading volumes are exceptionally low. Even today in the S&P 500 spiders, we're trading just 23 million shares right now today, and we're averaging just around 50 million. That is very, very unusual for the month of September and October. So we'll see if this market has some surprises up its sleeve. As you just said, the month of September and October are 2 very, very highly volatile months. And I think the 7 year of a decade is also very, very important for traders to know about.
Hey, yeah, so the 7th year, that's when there's usually a crash or something happens. 87, we saw it. Did we see it in 97? We certainly saw it in 07.
We did as well.
We saw it in 07, and will we see it in 17? I'm thinking back to 77, definitely. That was when the Nifty 50 bit the dust. 67, I don't remember so well, but I seem to remember something happening with Vietnam and something happening with the market, but I can't remember exact. 57 was the year I was born, so I don't know what happened there. 47, that was Truman. Definitely. 37, I know it. So just going back to my limited recall here, and we see that the 7th year of every decade, which is technically the 8th, but we won't hold you to it, or something happens. So that brings us to the discussion of cycles. Nick, the guys who I talk to in this business who've called things better than anyone else, and I include you among that group, are all cycle guys. Is that a coincidence, or is there something to it?
No, there's no coincidence. There is definitely something to it. I had the good fortune of making a small fortune in the 2008 crash, and a lot of people don't realize, but in October 11, 2007 was when the market topped out. And now we're going up into another October. We got extreme complacency in this market. Now everybody's looking at tax cuts, and that's all great. I'm all for that. Believe me, I don't want to pay another tax that I don't have to. But the reality of it is, we'll see how these things get pushed through. A lot of people are just discounting the North Korea situation. We'll see how that plays out. There are so many intangibles, but the biggest intangible out there right now is complacency. And I think a lot of traders now have just become so complacent. They switch back to being so bearish so quickly, and then when you get markets like this, they just become so bullish so quickly. So I still am looking at the seasonality trends and the cycles, and it tells me we can be in for a big surprise in October, and I don't think any trader out there should discount that at all.
Hey, so you got the cycle, because there's 2 cycles at work here, and there's probably more that we're not even mentioning or noticing. But number 1 is the 7th year of the decade, and number two is September, October. Now, we had in September our share of natural disasters, not just in the States here, but worldwide. But in the States, Houston and Puerto Rico, Florida to a lesser degree, the Keys really got slammed, but they seem to be bouncing back pretty well. I'll tell you one thing, just like I wouldn't want to be in a trailer or mobile home in the middle of a Cat 5 hurricane or a Cat 4, I don't think I'd want to be fully invested in the indices in the midst of a Cat 4 financial storm either.
That's right. And right now, I mean, if a lot of people don't realize, we haven't even had a 10% correction in ages. It's been so long. You have to go back. I think we had, our last halfway decent correction goes back to January and February of 2016. So, we're talking quite a while now where we have not had any correction. And we've had about 7 or 8 quarters where we've had gains in the overall market indexes. So, when you get to markets like this and everybody's so complacent, all the talking heads on television, just ride the bull, it's going up. Hey, I'm all for that. I love, for markets to go higher. I want to see jobs come back to the United States. I want all of that. But I think people just don't realize it has a lot of feel like 1987. It has a lot of feel to it where you have just complete complacency. And I have to tell you, when you have volume trends like this where, spiders today, late in the afternoon are trading just 24 million shares. Last year at this time, we're trading over 100 million. When you get 24 million shares a day, when the sell button hits and those algorithms turn down, everybody's running for the same exit. And that's where the markets can fall in dramatic fashion. So I think, traders right now, I'm not saying you need to get out of your long positions. I just think you need to protect them because, we start to see seasonality trends, and we have so many of them. You alluded to a few with the 10-year cycle, the 7-year of a decade, but there are so many more. I mean, I just went through a little seminar with my members just last week, and I named over 10 cycles that will coincide with this year, and I think that is a red flag to put up right away. Whether or not it happens remains to be seen, but that's why we're traders. We let the first move take place, and then we could just jump on board. So there's no real rush to it, but you just should know about it, that it can happen.
Hey, and Nick, let's not forget the market is smarter than everyone. You can suppress, you can manipulate for only so long, but then what happens?
The reality will come to the tape. That's the old saying on Wall Street back in the 90s. Reality will come to the tape. And again, the market is smarter than everybody else. And, that's why we watch chart patterns. That's why we even pay attention to cycles, because you want to know these things are coming. Back in 2006, 2007, I remember Jim Cramer on TV saying, hey, buy the stock market. It's the greatest ever. And, just a week later, the market topped out, and that was the end of it. So, do your own homework, study cycles, study past history. That's the only way you're going to have any clue of knowing what's ahead.
Hey, and ignore the headlines. The cycles are more important than the headlines. I've read, I don't remember who said it, but that the cycles aren't determined by the news. The news is determined by the cycles.
I agree 1,000%. I've seen it, and many of my members, many of the members here in the Money Stocks can tell you, it's been incredible to see. We haven't always hit a cycle perfectly, but many of them we've hit to the exact day. Sometimes, as you go into a year like this, you're really looking at a window. September and October is always a danger zone. So again, I think traders need to be on their toes. And like I said, you don't have to be, betting against the market right now. You could still stick with your long positions, but when the danger comes in, just be ready to exit it and, maybe even reverse course.
Reverse course. And so if you want to protect without selling, what do? You buy leaps? You're buying options?
Sure. You could do an option strategy. You could always, write calls and take in some income, and then, you got a little buffer there. And then if you want to get aggressive, you could also, buy put options. You could buy calls on the VIX, which will, protect your downside. And that's a good way to play it, because ultimately we don't think, with all that's going on, there's so much positive stuff going on with the Trump administration, even though a lot of people may not like him, deregulation, cutting taxes, repatriation of capital. These are all positive things for the financial markets. There's no two ways about it. And that's why you see the markets just grinding higher each and every day. But the reality of it is, Ronald Reagan had a lot of positive stuff going on in 1987, and the markets, still had a crash. So again, the clock always has to reset every so often. And, anytime you go into a stock market like we're trading right now, and we have no real or major corrections in almost 2 years, I mean, you have to be on your toes when that occurs.
Hey, for sure. For sure. I mean, the cycles don't lie. The cycles tell it like it is.
They certainly do. And, I'm still a student of cycles to this very day. I've been studying them for, well over 20 years, and I probably will be studying them for the rest of my life. At this point in time, you get into that September, especially October. I mean, this is just a notorious month for big, quick falls. I mean, you go back to a 30-year cycle, you're talking about 1987. You go back to a 10-year cycle, you're talking about 2007. You go back to a 60-year cycle, you're talking 1957. These were all precipitous declines that occurred, and I think the month of October is notorious for repeating itself, and I think traders should be on their toes.
Hey, totally. So talking about insurance policies, how are old friends the precious metals doing here?
Precious metals have had a great run. In fact, I was not so bullish on gold this year, and we had that big run in gold. And right now, when I look at the chart, we're probably into short-term support on this little pullback that we've had over the past month. But I mean, spot gold got all the way to 1360. Now it's trading at 1274. So I think we're right at that point now where I'm starting to like gold for the short term. Now, longer term, as you know, Kerry, I love gold. I think everybody should own gold and silver bullion or gold and silver coins. It's your ultimate protection against everything. So again, I would urge traders, on dips like this, if you're looking out for the long term, this is where you want to be picking up gold and silver, the physical gold and silver. If you want to trade it via the paper, you could do that as well. But again, when you get these dips, this is where you want to get back in. But I still think that we have probably another year or two, with this choppy tradable action before gold really makes its move to the upside again. And, if you look at a big, long chart of gold, say a monthly chart, and you go back and you look at when gold really broke out in 1999, 2000, where it really came off the floor, off the bottom, and it had that big power surge all the way up to September 2011, which was around the high of $1,923. All that we're doing right now is backing and filling and making just a big corrective pattern for the next leg higher. So again, gold, I think, is your ultimate long-term play, and everybody should have some exposure. Yeah,
couldn't have said it better myself, Nick. And where's the dollar heading in oil at this point?
Well, right now, the dollar has had a pretty good correction. I think it's making right now at the moment just a move to the upside, but I don't think it's a sustainable move. I think the dollar can still come back down, but it doesn't go much lower. So the dollar is almost done with its bottoming process, probably has one more minor leg down, maybe to the 89 level on the U.S. dollar index, and then I think it's off to the races for the dollar. You're going to start to see as problems start to erupt in Europe, money's going to come right back into the U.S. dollar soon. You see the problems that Spain is having right
Catalonia.
now.
Yeah, I wanted to mention that. Wanted to bring that up.
That is just the start of it. And also, people are not really talking about the German election, but Angela Merkel, even though she won again, she really lost a lot of power in this election. So you're not going to hear this in the mainstream media, but these are problems on the horizon for the Eurozone. And watch out, when that starts happening, capital comes right back into the dollar. That hurts the multinational companies, especially Dow Jones Industrial Average components and S&P components. Yeah. This is just all part of the domino effect. It's just one big global tape.
Yeah, so Catalonia, though, is big. I mean, that's another black swan. A lot of you out there never saw it coming, and yet we've been following it for years already since their first referendum, right? So
that's right.
Long time. So a lot of danger signals out there, a lot of danger signs, a lot of rough waters, if you will, storm clouds on the horizon. And what do you do in the market, though? Do you wait for it to get hit, and then do you go back in, or how's this going to work?
This is the good part about it, is that you have so much capital that has been printed by the central banks over the last 10 years that even less than that. You could just say the last 8 years. There's been so much capital by the European Central Bank, by the Bank of Japan, by the People's Bank of China, by our own Federal Reserve, which is, basically, we talked about it, you and I, the central bank to the world. So what are they going to do here, right? What are they going to do? They're not going to, continue to raise interest rates at a rapid pace. They haven't done it, haven't started it yet. I mean, we're at a 1% Fed funds rate, so it's an absolute joke. And again, they're just, there's just so much capital out there. It has to be put somewhere. And that's why you see all of, Europe has had a big run to the upside. Then that will switch and money will go elsewhere, go back into the United States, and then it'll go back into the Asian market. And you'll just get that rotation of where the money's going. But it's really just passing the same hot potato around. And the hot potato is just all that central bank money.
Yeah. It really is. And they have an unlimited amount of money too, Nick, right? I mean, there's no limit.
It's unlimited. It's infinite. And, I mean, the Federal Reserve is talking about trying to unwind their balance sheet. I just don't see how they can. And it's so much. It will, I did some math the other night, and I was telling my members, probably take about 20 to 25 years to do. I just can't see how it gets done at all, personally. But, we'll see, what they come up with.
Look, they can say to the XYZ hedge fund, here, take this stuff, and don't pay us now. You can pay us in a year and a half. And that's how you get rid of this stuff, right? And
well, that's kind of one way. I mean, they definitely have direct bidders on everything that they want to get rid of. So, that's the positive. But the negative is that these direct bidders can't really take possession of this stuff. And a lot of people don't realize there's a lot of bets out there with these derivatives, synthetic derivatives. These things are all domino effects, or they all have fuses connected to the big time bomb. So it's a lot trickier and a lot tougher than a lot of people think. Even myself, when I try to look at it and try to figure it all out, I say to myself, wow, this is insane. I don't even know how this works. But, at the moment, as long as you don't have extreme panic and fear, the markets, ultimately can still go higher after corrections. But it's never been healthy to go this long without, a 10 or 20% correction. Yeah. I mean, it's just a trickle up constantly on no real excitement. It's just the market just has to go up every single day. And that is not a sign of healthiness, if you ask me. And that is going to make for not only will it follow, I think, the 10-year cycle where the market hit some turbulence in 2007 in October, but it really hit turbulence when you got to January, you got to May of 2008. And I think we'll see something similar to that when you get to 2018.
Yeah, I wouldn't doubt it. No doubt. So, well, if the market's going up today, it's probably because the Secretary of State said that he didn't call the president a moron.
Yeah, well, I did see that. Rex Tillerson, he recanted what the media had said, but I think he probably did at some point.
I'm sure he did. But, like I call my kids a moron or... Well, my ex-wife, but it might have been true there. But no, seriously, you say stuff when you're upset that you don't necessarily mean. And, that thing that Trump said, hey, Rex, don't bother dealing with the little rocket man. It's pointless. That was like prearranged. People are so thick. They don't understand.
Oh, that's 100% prearranged.
Please.
And again, it's just trying to get a message across, and the media here we're dealing with a different type of media these days than we used to in the past.
Oh, they're brain dead. They're brain dead. They're uncurious. They're disingenuous, and they're out and out lying SOBs, pathological, psychopathic liars. I mean, it's really that simple, which is another reason.
Put a few more adjectives in there, too.
I could probably think of a few, but my vocabulary is running short. But, this is the thing. This is why you also need to be careful of these markets, because the media is not leveling with you, particularly the financial media. They're just not telling you the way it is. They're not talking about cycles. When was the last time you turned on CNBC, Nick, and you heard somebody talking about cycles? Did that ever happen?
I don't remember.
Yeah, I can't remember it ever occurring. I've never seen anyone talk about cycles on any financial, whether it's Fox or CNBC or any of the others. No one ever talks about it unless they have the freak on You know, every now and then they have the freaky guy who doesn't know anything, and then all of a sudden he's right, and they're all lined up at his door. But otherwise, it never happens. Never talk about it.
It doesn't happen, and that's purposely done. You know, so just like you said, the media, they're very controlling. You know that as well as anybody. But that's why you have outlets like this. I mean, this is the real media. This is what it's about. And
you got it.
You know, I think it's a privilege and an honor to always, to come out and to just, give people a heads up on what's going on out there. But, if you want to live in La La Land, you can. But the reality of it is, this is, you see the trend is switching, and this is where people are going now to get the real news, to get real information.
God, yeah. Yay. And to get unbiased analysis. So anyway, Nick, we find you at inthemoneystocks.com. Hey, email us. Questions, comments, kl@kerrylutz.com. You can also use the website, the comment feature there. I review all those comments. We've had a lot of them lately. It's been fun to read. Twitter feed, you can get us there at Kerry Lutz, and the Facebook page, Financial Survival Network. Nick, it's always great speaking with you. Glad you made it through the storm unscathed, relatively unscathed. Hey, we'll talk to you in a little while.
Kerry, I always appreciate being here. Thank you for having me. Have a wonderful, wonderful week, my friend.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.